Hello, my name is Russell Gard, Managing Director of Forward Prosperity. In the current economic climate, interest rates are likely the most significant variable affecting your cash flow and borrowing capacity. Whether you're managing your very own business, overseeing your workplace's finances, or looking to take on finance to achieve your personal goals, understanding how interest rates move is the first step in securing your financial position. In this quick presentation, we will cut through the financial jargon and provide you a clear understanding of what is an interest rate. So, to start off, what really is an interest rate? Simply put, an interest rate is the price of borrowing money. Think of an interest rate as the rent you pay for borrowing capital from a lender. When you take out a loan to fund new equipment, business expansion, or an additional property purchase, the interest is the fee you pay the lender for borrowing their money. The interest you pay compensates the lender for the risk they take on and the time that their money is out of their hands. Overall, interest is the primary tool used to value time in our financial system. In the finance brokerage world, there are primarily three important categories of interest rates. Firstly, variable interest rates. These are interest rates which move up and down with the market. They offer flexibility with features like offset accounts. However, they do mean your repayments will rise or fall based on central bank policy and economic conditions. Secondly, fixed interest rates. These provide a lock-in period of your interest rate and respective interest repayments, usually from 1 to 5 years, meaning you obtain absolute certainty of your debt repayment commitments. And finally, comparison rates are another important number. A comparison rate is the interest rate plus the fees and charges of a loan, showing you the true cost of borrowing money from a lender so you can compare apples with apples between two different lender offers. The reason the comparison rate is so important is because some lenders might offer you a slightly lower interest rate to entice you to choose them, but then add expensive additional extra costs, which actually mean that borrowing the money from them will cost you more overall, even though the interest rate they are offering is lower. This is why it's so important to work with an accredited finance and mortgage broker like us at Forward Prosperity to help you avoid making crucial mistakes. Why interest rates fluctuate? Interest rates don't move by accident. They are, for the most part, a response to ever-changing economic and financial market conditions. Here are three key factors that can influence interest rates. Firstly, inflation. If the general cost of living, such as prices for fuel, materials, or groceries, rises too quickly, the Reserve Bank of Australia usually raises interest rates to cool down the economy and slow down spending. Secondly, economic stimulus. If economic growth is too slow, the RBA could lower interest rates to make debt cheaper, encouraging businesses to invest in new projects while also making it easier for consumers to borrow money. And thirdly, global financial markets. Interest rates can be affected by the bond market as well as global energy commodity markets. These types of financial markets can influence interest rates because they provide significant external pressures which can influence what local Australian lenders charge as interest rates. To put the importance of interest rates into perspective for your next project or property acquisition, let's look at a direct comparison for a $1 million loan. On the left, we have a loan with a lower interest rate of 5% per annum, meaning the total annual interest expense sits at $50,000. However, if that interest rate were to climb up to a higher interest rate, for example, of 9%, the annual interest cost of the same $1 million loan jumps up to $90,000 per year. That is a $40,000 difference in the annual interest repayment simply due to different interest rates. This clearly illustrates that a higher interest rate results in significantly higher costs when borrowing from a lender. At Forward Prosperity, our goal is to navigate these finance numbers to ensure your debt is structured as efficiently as possible for you. Thank you for watching this quick presentation covering what is an interest rate. If you want to review your current finances or plan your next property acquisition, let's have a conversation with no obligations. Reach out to us at forwardprosperity.com and let's get your finance working harder for you. If you enjoyed this presentation, hit that like button, comment your biggest question below, and subscribe to the Forward Prosperity YouTube channel for more economics and financial updates.